Hey folks, Dan Frio here with your closing bell for September 16th, 2025. So tomorrow, less than 24 hours away, the Federal Reserve is going to meet. They're going to tell us exactly what they're going to do, and I'll probably give you what they're going to do tomorrow. I'll probably be 99% right, but we're going to get what's called the dot plot that's coming down the pike. It's going to tell us where rates are going to be, this next few meetings this year, then what their thoughts are in 26 and 27. But our biggest concern is, what are they going to do at this meeting? So to find that out, let's get to today's news, folks. So my name is Dan Frio. I do this report each day to help you guys understand what's going on with these and the whys behind it. Because if you're watching this video, most likely you're looking to buy or refinance. I'd love to be able to help you. I'm licensed in all 50 states as well as Puerto Rico. I have a slogan, one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? I'll give you that information at the end of this video. So let's get to today's news, folks. So here's what we got. We got within 24 hours, the Federal Reserve is going to be meeting. Why it's an extraordinary meeting this time? Well, let me explain to you. You probably heard the name Lisa Cook. Well, she was the Federal Reserve official that the president tried to fire or fired, but she's still being able to attend this meeting, which is kind of odd. But then we have another person that the President Trump just handpicked last night. Well, before this, but he got voted in last night before the today's meeting. It's right through here. So the Senate actually confirmed Trump's advisor, Moran, as the new one of the new Fed governors, just in time for tomorrow's vote. So what are they going to do? Let's get over to it. But first, I want to go over to CNBC. This is Goldman Sachs, their analyst, telling us what she expects from tomorrow. Then I'll give you my thoughts on it. Then when we're going through, I'll give you what my analysis is giving us and what my thoughts are in this. And then we're going to go over the dot plot, why that is probably the most important thing that we're going to get in tomorrow's meetings. But without further ado, let's get over to CNBC and see what Goldman Sachs has to say about all this.
If we did not start with the Federal Reserve, what is Goldman expecting from the Fed tomorrow?
So we're expecting a 25 basis point cut. We do, to your point earlier, think that it should be somewhat of a hawkish tone, however, in the presser. And the most important parts will be the comments that are coming out of Jay Powell, in addition to where they see the forward dots, and where we see some of the dissents, especially considering the composition changes within the Fed and some of the voting constituents.
It sounds, a hawkish cut is a little weird, right? We kind of got one last year where it's like almost like a hold your nose type cut. It's a little bizarre.
I mean, they're clearly going to address the dual side of their mandate, and they're going to, allude to the fact that things are, both sides of the mandate are under pressure, which is why they're going to start the cutting process. But, let's be clear, inflation is still at best trending sideways. Now, you could argue that the structure and the composition of that inflation is in a better shape, but in no way, shape, or form are we close to the 2% target that they're looking to achieve.
Should they be cutting into an inflationary environment?
I think it's very difficult, if you really do have this dual mandate, to not start to cut when you see the weakness that we've seen in the labor market. Now, that being said, from the June SEP to now, actually the spot data has materialized to what they've called for. So we're about, trending towards a 4.5% unemployment rate, core PCE around 3%, and they had marked in two cuts. So this is just starting the journey that they had already started to signal toward.
And the SEP is, I believe, Wall Street speak for the Statement of Economic Projections, where basically the Fed looks out. What do we think is going to happen? I imagine your clients, though, Alexander.
So we'll leave it at that. They started talking about stocks and all that other from that point. So she has a great point. The SEP's also triggering that. But it's actually falling right into what the Federal Reserve's, their goals were. They wanted the unemployment number they thought would maybe go up to 5%. Anything under 5% is full employment. So the Federal Reserve has two mandates. It's right through here. So their whole goal here is to keep inflation in check. They follow the PCE. Inflation is, that's that part of it. Then the unemployment rate. Their goal is full employment. So anything under 5% is full employment. That's what the numbers represent. So here's the number that they control right through here. So let's get over to what the dot plot's going to look like at the next meeting. So here's the federal funds rate right now is 4.25 to 4.5. You have to understand that as our starting point. So here's the dot plot that was presented to us last time the Federal Reserve came out with this. So this is from the Federal Reserve's voting members, folks. So they're saying right through here, the federal funds rate right now is currently right here, 4.25 to 4.5. Hopefully you can see that. Let me zoom this in and see if I can get a little bit clearer for you. Okay, right through here. A big portion of those voted right through there. Then you had 2 dissenters saying that they're going to be a 0.25% rate cut, but you had the majority of them right through here. Okay, this means there's either going to be 2 rate cuts of 1/4 or at least 0.5% cut in rates. This is from the Federal Reserve. So what the young lady was saying is, well, it's basically this dot plot was created on the unemployment rate being 4.5%. And inflation being, the PCE number being where it is today. So this is where the Federal Reserve most likely should be. But what's going to come out tomorrow is they're going to tell us what they're going to do. And there's a 99% chance they're going to actually do nothing. Let's get over to where the Federal Reserve, where is it? Let's go to this right through here. Let's see what they're going to do tomorrow based on the CME FedWatch tool. So we'll go there, we'll look at probabilities. And here's what this is telling us. So it's saying there's a 96% chance there's going to be a 0.25% cut. And then after that, let me get my head out of the way. There's going to be another 0.25% cut at the next meeting. And then from there, there's going to be another 0.25% cut. And then basically it's off the table. So they're projecting in here 3 rate cuts, bringing us down to about 3.5 to 3.75 on the federal funds rate. Well, that's what the markets are expecting. So again, this is what the markets are expecting. So as long as this data comes in line, you're going to see the markets just trading kind of accordingly, and you won't see any major hiccups around the equation. But it's all going to depend on what the Federal Reserve comes out and tells us tomorrow, and then also what the dot plot's going to be. But I'm going to bring it up once again, folks. We can't lose sight of the tariffs. Okay, the tariffs are going to come to fruition at some point within the next probably 60 or 90 days. So please be cognizant of that. So if you see bad news coming for tariffs, meaning that they take them off the table, meaning they are illegal, lock in because rates are going to jump. If they come in and say the tariffs are okay, well, the markets are just going to continue to stabilize. I think the markets are going to do okay, stabilize. You're going to see the dot plot starting to come into effect, and you're going to see rates continue to ease accordingly. So we're now getting into that sweet spot. Rates are going to stay in a range maybe now of 6.25 to 6.5. And then once we get the data from the Federal Reserve, then they can ease a little bit further and go in accordingly. But the whole thing right now is going to be up to the Fed, the dot plot, and also the tariff news, and it's going to be how these are affected. So, folks, here's today's rates. I don't know why the 30-year fix is showing it's down an eighth, and then basically the 15 years flat, because if we go to the MBS market, you're seeing right through here, MBSs were flat on the day, which we kind of expected. Expected the day before the Federal Reserve meeting. Normally this flattens out. And then let's go over to the stock market as well and look at what that's going on. That's kind of a little differences there. But yes, the NASDAQ or the Dow Jones is kind of all over the board over the last few days, not following suit. But if you look at the other indices, you got one up or down 8. You got the NASDAQ down 14. You got the Russell down 2. You got VIX up to 16. So the markets are kind of stabilized right now. Basically, everybody's sitting on the sidelines, waiting for the Federal Reserve's decision tomorrow. So that's what we're going to wait for as well. So my expectations are they're going to come in tomorrow. They're going to basically not do anything, cut rates a quarter, come out, and then we're going to follow that. Join me live tomorrow. We're going to be live when the Federal Reserve Chairman Powell comes out and speaks to the media and starts really telling us what their thoughts are behind closed doors. And that is what affects the markets. So join me live tomorrow to see instant reactions to what the Federal Reserve does and then how it progresses from there. So let's get over to what I am and who I do, folks, or however you want to say that. My name is Dan Frio. Like I said, I'm actually a licensed loan officer in all 50 states as well as Puerto Rico because the bank that I work at holds a federal license for us. But the unique thing here at the bank, we're set up with over 30 different lenders, and this helps you guys. So when you call in, we're not just going to get you approved and look at our rates. We have the ability to use about 33 other lenders. We can use their rates and their programs. Some of the programs they're offering us and we can help you with is down payment assistance. Are you looking to buy that home and you just need some help? So this is a program that will give you up to $7,000 in down payment assistance. Check it out. The good news about this, you don't have to pay it back. So when the rates go down and you're like, hey, it's time to refinance, you don't have to worry about financing another $10,000, $15,000, $20,000 in that down payment assistance program you got because it was a loan. This one's completely forgivable, folks. And last but not least, right through here, if you're looking to refinance, and you're like, Dan, I just don't know when to pull the trigger. Well, go in here and do me a favor. Put in your loan mortgage information. And what I want you to do is if you don't really know, put in the rate maybe 1.5% lower than you have today. What's going to happen is we don't sell any of this data. I monitor it on a daily basis. Then what's going to happen is me or my team is going to reach out to you. We're going to go over what your new payment would be. versus your old, see what the savings is, how much it would cost you, what's your break-even point, and if you want to lock in and get the paperwork started. If not, we'll just add you back to the list and drop that rate. But most people are finding out right now we're able to save them a lot of money in fees and a lot of money in the rate on their payment. But if you've already got a quote, one last thing I want to show you guys. If you already got a quote and you're like, Dan, can you compare mine? I already got a quote. Well, yeah, upload your loan estimate right through here. What I'm going to do is I'll do a personalized video right back to you explaining to you, what can we do with the fees and the rate? If we can beat the current lender you're using now on the fees and rate, I'm expecting you to win you as a customer. So make sure you reach out to them before you reach out to us to make sure it's their best effort forward, because if it is and we can beat them, I'm expecting to win you as a customer. So that's it for today's video, folks. I will be back tomorrow morning at the opening bell to let you know how things start, but then we'll be live at the Federal Reserve meeting to let you know instant reactions to the markets and the whys behind why these are moving. So thanks for watching, folks. If you need some help, we'd love to help you out. But otherwise, have a fantastic evening. God bless you and be safe out there, folks. See you tomorrow. Bye-bye.